What you are cooking, you're a fat. It smells like how Chef Sherbani or his son Chef Allah cook.
Because I missed the Egyptian food too much, I am frying some tilapia fish that are tastier than those served at Kanda or a restaurant in the Bahari district in Alexandria. A side dish of rice with a flavor of fried onion is also served. You will lick your fingers, you Dr. Khalid. I wish I could bring you some radish as an appetizer to make you feel a complete Egyptian family environment.
You are so kind, you're a fat, but because I have a headache, I need some strong tea and a painkiller for the time being. Please let the lunch be served after we finish the session. At the same time, please don't drain the frying used oil in the sewerage system, nor save it until you sell it at 30 pounds per kilo to the guys riding the tricycles.
Don't worry, doctor. The tea will be ready in no time, and you can start the session.
Today, I will talk about impairment test for recognized goodwill. Goodwill is tested for impairment at the reporting unit level. Note that all goodwill is assigned to the reporting units that will benefit from the business combination. It is tested for impairment each year at the same time.
What is meant by reporting unit level?
That is a very good question, Rafat. A reporting unit is an operating segment or a component that is one level below an operating segment. If you look at the organizational structure of a company, you may find that the company may have one or more reporting units. Each of the reporting units may contain one or more operating segments. Each of the operating segments may contain several components. Thus, goodwill is assigned to operating segments or components that will benefit from the business combination.
I appreciate. Would you give me an example of a company's organizational structure showing reporting units, operating segments, and components?
Okay. Assume that Sama and Sidnawi and Shkoreal Company for High Tech has two reporting units, one for gaming and the other for the computer. 1. The gaming unit has one operating segment. The gaming operating segment has three components. One is for professional equipment, the second for personal equipment, and the third for software. 2. The computer reporting unit has two operating segments. One is for personal computers and the second for computer supplies. The personal computer operating segment has only one component, which is the desktop. The computer supplies operating segment has only one component, which is the laptop. Thus, the reporting unit level for the gaming reporting unit may be the gaming operating segment or the three components it contains, and the reporting unit level for the computer reporting unit may be one of the two operating segments or the one component each of them contains.
It is much clearer for me now. I am afraid that you see me as greedy if I ask you for an example that is supported by numbers.
Assume that Ozak Ben Amitai Company (E&A) acquires Eliyahu Gedowski Company (E&G) at $1,500. The fair value of the identifiable net assets acquired is $1,000. Up to this phase, the matter is very simple because we can easily derive that goodwill amounts $500. However, what we want to do is to assign goodwill of $500 to two reporting units, A and B. The acquirer assigns the fair value of identifiable net assets acquired at $200 and $800 to the reporting A and B, respectively. The net assets assigned represent businesses whose fair value is $500 and $1,000 respectively. Providing that no other reporting units are expected to benefit from the acquisition, how should goodwill of $500 be assigned to reporting units A and B?
For reporting unit A, goodwill assigned is $300. Being the excess of fair value of this part of the acquired business of $500 over the fair value of identifiable net assets assigned to reporting unit A of $200. For reporting unit B, goodwill assigned is $200, being the excess of fair value of this part of the acquired business of $1,000 over the fair value of identifiable net assets assigned to reporting unit B of $800.
Excellent, Eurofat. Now, we will be back to talk about testing goodwill for impairment. As in the case of intangible asset with an indefinite useful life, an entity may elect to perform a qualitative assessment to determine whether a quantitative impairment test is needed.
What if the qualitative assessment indicates that potential impairment exists?
If a qualitative assessment indicates that potential impairment exists, the quantitative impairment is to be performed to determine whether goodwill is impaired.
How a quantitative impairment test is performed?
1. The fair value of the reporting unit is compared with its carrying amount, including goodwill. 2. Goodwill impairment loss is recognized for the amount that the carrying amount of a reporting unit, including goodwill, exceeds its fair value. The loss is limited to the total amount of goodwill allocated to that reporting unit. The journal entry is to debit to impairment loss and credit to goodwill. Please note that goodwill impairment loss is recognized in the income statement and cannot be reversed in the subsequent periods.
If the session is up, I can serve the lunch. I hope you will enjoy.